All right, before we jump into today's video, if you are an elite channel supporter and you're part of that group, who have subscribed and basically support my efforts as a content creator, you already know I'm going to be breaking down today's trade that I took and posted over on the Discord group. It's right here. This is the trade I took. It was a short entry. I will be breaking this down in detail, again, like I do when I post trades over in the Discord, so that you understand the full-on mindset of the reasoning why I took this trade, okay? Breaking it down, in reference to, not only the strategy, but in reference to stop loss and profit targets and things of that nature, so that you understand. Now, today's video is covering the strategy for those that are first-time viewers or beginner traders or interested in understanding and learning a specific strategy, and don't have one in their playbook. You want to watch the video entirely because it's very, very beneficial, and you're probably going to pick up a lot of good key golden nuggets that may help you out. So without further ado, let's go ahead and jump into today's video. All right, so I've been trading a little bit over 14 years now, and the scalping strategy in which I use each and every day, it's pretty simple and easy if you know how to trade it correctly. Lots of traders that get mixed up because, for one, they may not be trading the same type or same charts I'm trading, the 120R for my higher base analysis, looking to determine is the market bullish or bearish, and then I'm using a 24 range chart to make my entries on. And it all surrounds supply and demand. So I'm looking for aggressive buying at areas of supply or demand, but I have to be able to understand what's going on from a top-down analysis on the higher base chart first and foremost. So I'm a scalper, so I'm looking to use a strategy, scalping each and every day, looking for, several points within the market. And I've been trading the NASDAQ probably more so last year, and now we're into 2025. So I am looking at other markets like the gold market and, of course, still at the ES. But I just like the movement of the NASDAQ because so far this year it's been showing a little bit more movement than other markets, and I can find at least one good solid setup today. So I want to break down, somewhat the strategy so that you understand, because it all is centered around multi-chart confluence. All right. Again, if you use time-based or tick or volume-based charts, that's fine. Supply and demand is what it is. Some people just kind of trade it a little bit different. But the number one thing a couple of things I'll say. The first and foremost, before I get started, market structure is everything. You have to understand the movement of the market. Is it making higher highs, higher lows? Is it reversing, making lower lows and lower highs, where it's taking out structure coming to the downside, or in inverse of if the market is moving the opposite direction? You have to understand that. Now, when it comes to the strategy, the number one thing I'm looking for, I must see, is a break of structure. Okay, and it's really three things that I really want to clearly identify. In a sense, is one, break of structure. Two, is there an imbalance resting back at the zone? And three, is the market moving in the trend when I'm looking for, pullbacks to these key zones once I've identified a break of structure. So let me show you just a few setups right quick and let you know basically what I'm looking at. So just say, for example, today, okay? Looking at my 120 range chart, I can see that the market has been moving to the downside. All right, into today's early session, coming out of London into the New York session, the market was making lower lows and lower highs and breaking structure. Breaking structure below here, breaking structure as it came down and broke below here, and then we had a slight break of structure just a moment ago where it came down and broke below here. But before it made this move where it broke structure or slightly below this area here, and most of you should understand what's going on here and what they're doing right here. This could be considered as a liquidity grab, or most people will probably look at it as an area of support, in which it is. So because they didn't break and close below this area, this could be considered as an area of support. As you can see, the market turned back around. It didn't break and close this area here. So it's not a full-on technical break of structure. They slightly broke below this area here, as you can see. So the wick of this candle that broke below, it can be considered a slight break of structure, and this could be a supply area in which they react off of. But what I want you to focus on is one of the setups in which I put out over on our Discord community. Now, I'm going to talk about this right quick because the fact is the market was making lower lows and lower highs. All right, as you can see, it coming to the downside. But we made this low here, right? Then it turns back and makes a high, pulls back. It does not make a new lower low, but then it breaks structure to the upside, leaving behind this demand zone right here. So I marked this up and put this over on the Discord. Now, I always talk about price action in reference to this, structure of the market, you have to first and foremost understand. When the market was coming back and approaching that zone, that magenta ellipse or circle area you see right there, this is an area, okay? This is an area of, one, definitely resistance, but two, this is an area of supply. Look, the market came down, aggressive selling to the downside, tapped the zone right here, which is demand zone. So you have to treat this as an area of supply in which if the market reacts here, based on price action, what's going on the higher base chart, the 120, that it can definitely, you just come back here and this area can be treated as a means of resistance. And that's what typically what happened, because I'm going to show you on the lower base chart what took place. But I'm also going to show you, where you could have gotten to the trade at just as well. So pay close attention here, because this is a demand zone. I marked it up and put it on our Discord community. Anyone that's interested in joining the Discord community, the link is the first link down in the description portion of the video. It's free to join. Right below that is the, basically it's titled the Elite Channel Supporter tier, or not tier, but link. If you're interested in receiving the trade breakdowns, the video playlist, and the market structure video that I did, all that which are perks and rewards that I give back to those who want to become part of that membership. It's very inexpensive. It's only $6.99 a month. I don't have a trading program or a course or a mentorship program. That group of videos or list of videos that I've included for all those who are part or want to become part of the Elite Channel Supporter. If you pay attention, because I go through the full-on rundown of trade breakdowns after 1, after 2, after 3, after 4. There's so much video content there surrounding these trades that I post over on our Discord community that I've taken. I break them down for our Elite Channel supporters so that they understand, basically the meats and potatoes behind the strategy as a whole, but also understand the strategy in reference to how I, got into my trades. What I was thinking about in reference to market structure, understanding that first and foremost, and then looking at, according to price action, surrounding the supply and demand zones and marking those areas up and using the strategy, breaking it down. So giving you a full-on, I guess, a detailed idea of what I was looking at as far as getting into the trade. Talk about stop losses, profit target areas, the structure of the market, of course. But you also get the video playlist and the great video that I covered on market structure for anyone that's struggling with that concept. Again, it's only $6.99. I know a lot of you probably spend that or more daily, if you're working at your job on a price of a cup of coffee or a breakfast sandwich or whatever it may be. But this is something that's very inexpensive that may change your life. But it's up to you, okay? I can't make any guarantees because you're not me. You're not the next trader. You have to really understand how this works and how to catch these setups and know what you're looking at. So maybe it will help you. Maybe you want to take interest and give it a try. That's up to you. But it is there for anyone that wants to become an Elite Channel supporter and give it a shot. All right. And basically what you're doing, you support my efforts as not only a trader, but as a content creator by providing you information that through the video content that can, be very beneficial. Now, we're going to move down to the lower base chart. I just want to throw that out there for anyone that's interested and show you what took place here when we tapped into the zone. Moving down to my 24 range chart, this larger box is that 120 range demand zone that I showed you on the 120R chart. This is my 24 range chart. And what I do right here is, once I'm down on this chart here, I'm looking to see, all right, the market tapped the zone. Of course, we can see that, right? But on the inside of the zone, I'm looking, which is the larger box here, I need to see where there's a 24 range demand zone. There's one right here where there's a gap attached to it. Now, the gap or the imbalance is the most critical part to it all. We can mark the zones up on the higher base chart, but we have to also identify, is it both high probability on the higher base chart, which it is because we have a gap attached on this candle here that broke above that bearish candle, did a downside right here. So that makes it a high probability zone on the 120R chart, the higher base chart. Then if I look at my lower base chart, we've tapped into the zone, okay? This right here is a breaker structure to the upside. Right here, this small little area here, that's a breaker structure to the upside. And it's on this area right here, which is a demand zone. Listen, this is a push up, pull back, breaker structure here. This is a demand zone resting on the inside of our 120R zone that we marked up. I've talked about this a million times, guys, in reference to marking up these zones. So we need to identify a 24 range, smaller zone resting on the inside of the 120 range zone, okay? Now, once we've done that, we've got the larger box, mark the zone up, it taps it. Now we're looking for a breaker structure, where a breaker structure formed on the lower base chart on, pretty much on the inside of the zone, or of the higher base zone, but where there's a 24 range demand zone rested on the inside of the 120 range zone. So let me say that again. Again, take a look at the higher base chart here. It pulls back. We've tapped the higher base zone. We got to push up high, pull back, breaking structure, aggressive buying, breaking above this high here. That's the breaking structure. This is the demand zone resting right here. When it taps into the demand zone, the higher base chart, just move down to your lower base chart. Pay attention to see where the market was breaking structure to the upside, as it was on the 24 range chart. It was breaking higher here, breaking structure. This is an area here with the market as it was making higher highs and higher lows. We got a breaking structure to the upside, and there was a demand zone on the inside of our 120 range large box demand zone. So the smaller box is the 24 range, the larger box is the 120 range. Now, here's the thing. Once the market taps into it, what am I looking for? First, I'm looking to see if we get reaction or rejection. Right here, that bullish candle here, I can get in aggressive at 21,376 or 377 aggressively, or wait for the break and close of the next candle, which is at 21,380. Where am I aiming for? I'm aiming for these gaps on the 24 range. See this right here? We had this little push to the downside right here. These are gaps on these candles back to the upside to be filled, and then possibly maybe to fill some more gaps to the upside just as well if there are, or for it to run areas of liquidity. There's liquidity around this little zip or above this little small little high right here, but to fill the gaps in back to the upside first and foremost. Now, but we have to, I want to say this right now, we have to pay close attention, okay? Pay close attention to what is above us, even on a higher base chart. Look at here. I just said it. On the higher base chart, you got into the trade somewhere in this area right here, right? There is a supply area right there. Okay? So we must understand we're not going to be able to conquer that or beat out that supply area as a retail trader, okay? This is a supply area where they push down and tap into the demand zone, but you have to look above because this is a major area of consider it as an area of resistance, and it's a supply area, so they can react off of that area. As you can see here, when it pushed lower and came back to it, they're reacting off of it now. Okay, so we have to treat this area, even which is right around here, about 386, 387. We can see the market comes back to it around here in that area, and it starts playing funny, right? So you have to be understanding your scalp must be very quick if you're looking to take a trade on this high probability setup on a zone within a zone confluence, because you have an area of resistance and an area of supply resting right above you. Understand that, okay? So now a lot of people will ask, okay, why did I consider this area here versus this area? Say if this was a, this little area right here, which is a small area of demand. The reason why I wouldn't consider this right here, even though it did kind of, as you see, it came down there and it broke right below this little zone right here. Because if you really pay close attention, see the wick, we draw our demand zones from the top end of the bearish candle, right, to the bottom end of it, right? But the top end of the bearish candle is outside of a swing, okay? So this, for me, is not really a demand zone in reference to, where a swing may form. There's no swing right here, okay? Even if you consider this a swing to the downside right here, okay? The wick of this candle, this bearish candle, is above even the swing. So my swing must be on the inside. My demand zone must be on the inside of a swing. So that's why I didn't consider that area right here. If we look back here now, what do we see? Reaction or rejection back at the supply zone. So you have to be able to understand, just because you have something marked up and you mark it up well, both on a higher base and a lower base chart, you always got to go back and see what's going on the higher base chart. Is it something that could block that trade? Or, if you're looking to take a quick scalp, got to understand what's resting right above you. If you're getting to this trade right here, what's here? Okay, what's in this area, even on a higher base chart? Higher base chart is going to trump all. You got to understand that. Again, I'll show you a quick setup right quick. Now, this is, early part of the morning. Most people aren't going to trade this. This is actually before even the London session. It's during the Asian session. But I'm just showing you an example of another setup. Market pushed up, pull back, breaking structure above these highs right here, leaving this area of demand resting right here, okay? This is a high problem. Let me see if I mark something. Hold on a minute. 1 second. Okay, now this one's actually a low probability setup. I want to show you the difference right here. This is actually a low probability setup, okay? Because the market, when it pushed up right here before it broke structure, you see that bullish candle right here? It broke above this last down bearish candle when it was swinging here to the upside. The very next candle on the pullback, it closed the gap back down to the zone where it's resting right at the top of that bearish candle right there. Because we're going to mark, the zone is marked up like this right here. Okay? So when the bullish candle breaks above here, the next candle comes down and closes the zone, back down to the zone. It didn't leave a gap or an imbalance. If it did, then we were looking for it, it'd be high probability when it came back to it. Now, it did come back to it again. And when it tested it, so this is low probability because the zone was already closed in. But when it came back to the zone, you may ask yourself the question, would I be interested in taking or looking for a setup? If I move down to my lower base chart and there's a high probability zone, I'll still be interested because they can still react off of higher base, low probability zones when you have a high probability zone on a lower base chart, if that makes sense, okay? All right. Again, they can still react because it's a higher base zone off of a higher base chart, even if it's low probability. But if you move down and you see a a high probability zone within that low probability higher base chart zone, they can still react off of it. Again, they come back, they tap into the zone here, go down to the lower base chart. This is the zone right here. There is a very, very, very small imbalance. Okay, a lot of you probably aren't gonna be able to see this unless I blow it up. This was the zone that I would mark off on the inside of my 120 range higher base zone. Again, the higher base was low probability, but here the 24 range demand zone is high probability because we have a small gap attached on this candle right here. Let's see if I can blow up a little bit more. Do this. See that candle right there? It broke above that bearish candle to the downside that bullish candle did. When it came back, it left a very small, maybe a tick or two imbalance or gap there. You have to really, really zoom this stuff in to really see, especially not all the time, but there will be instances where you have to really see, is that a low probability? Is that a high probability zone? You got to blow it up. So when the market comes back and taps into that zone, okay, let's bring this together now so we can see it unfold. It taps into the higher base. Again, that was a low probability zone on the 120, but it taps into, it taps into the higher base 24 range demand zone on the 24 range chart, but it taps into the higher base low probability zone on the 120R. But we have a higher base zone on our 24 range. When it rejects that area, okay, after tapping into both zones, you can get in aggressive here at 21,360, or you can get in at the breaking close of the candle here at 365. But again, you got to be mindful what's above you. You can see market push down, pull back, it broke structure here. So this is an area of supply resting right here. You do not want to be taking trades, or if it reaches an area of supply, let's say they fill these candles here, these gaps on this candle here, you got to understand this is a supply area even on the lower base chart. So they can react off of there. They can react. This is resistance, okay? Also, but it's a break of structure that took place here on the lower base chart too. So be very, very mindful that they can react the moment they hit that area of resistance or back into that area of supply right above if you're looking to take a trade. So if you got in aggressive here at 360, I'm definitely going to get out up here around 373. You're still going to pick yourself up at least 10 points. 10-point scalp on the NASDAQ is still something. I mean, a lot of people, $250, $300, depending on if you're trading the E-minis, trading the micros, of course it's going to be less. But again, you got to be able to be mindful what's going on, considering price action before you enter that trade. If I'm interested in getting to this trade, all right, before I get into it, I'm going to say, okay, there is a breaker structure that just occurred to the downside here, below this low here on the 24 range. If I scalp this, I'm only going to be able to pick up maybe a minimum, a maximum, hopefully at least 10 points. Okay. I got to be very quick and very in and out on this trade here. All right. Sometimes this won't happen. Sometimes you may have, well, there may be a breaker structure, but then again, the supply area may be further up and you may have multiple gaps on candles coming down. And then you can start to aim higher, okay, up to close gaps back to the upside and maybe take it back up to that supply zone, okay? So hopefully that makes sense. But I want to show you this because I've been doing this for 14 years and what's worked best for me. Again, I'm using the 120R and the 24 range. The 120 range chart for my higher base markups and to identify structure of the market, but also using the 24 for my entry point of positions when I'm looking to get into a trade. If you're using other charts, guys, I don't know. As far as like time, tick, or volume, even if you're breaking it down and using, smaller base charts, using the range charts, I'm not saying I can't help you with that, but I'm telling you right now that if you're starting to use lower base charts, lower than what I'm currently using, because I don't use them, I'm not going to be able to really see what you're seeing because I'm paying attention to what I see. And the lower you start scaling down on charts, you're going to have a lot more noise in the market, okay? It's going to be a lot more choppier, and that's the reason why I'm comfortable with the charts that I actually trade. But if you're interested in understanding these simple strategies like this, looking to start trying to have, some changes in your life and you want to start trading part-time to start off with, or maybe full-time, maybe you've already retired, or maybe you're just looking for a change of venue in your life, here's a good strategy that actually works, but I would recommend anyone to back test it on your own, okay? It works. We've had successful people that have joined the Discord, they've learned it, they're doing well, extremely well on themselves. Some of them are there, some of them have moved on. Don't expect everybody to stick around. So again, try it for yourself. If it doesn't work, then move on to something else, okay? But outside of that, that's all I have for you guys today. I appreciate everyone that has spent time watching the videos each and every day. I appreciate everyone who's part of the Elite Channel Supporter group that supports my efforts as a content creator and as a trader. But that's all I have. If you haven't subscribed, take the time. Go ahead right now, click the subscribe button. Make sure to turn your post notifications on so you don't miss any of the uploaded content that I post pretty much on a daily basis. And if you found value in today's video and you say, hey, I'm going to give this strategy a try, please make sure to drop a like on the video. Click that thumbs up button before you click off today. All right, take care. See everyone in the next one.